Recently, Country Garden, China's largest real estate conglomerate, is going through an unprecedented crisis. On the evening of August 10th, the company announced an expected net loss ranging from approximately 45 billion yuan to 55 billion yuan. If Country Garden collapses, the industry will further deteriorate. The chilling effects will further engulf the entire sector, with banks hesitant to lend, customers reluctant to buy properties, and real estate companies wary of purchasing land, exacerbating a vicious cycle. By mid-July, Country Garden had already been hit by reports of debt defaults. Some of its bonds, both domestic and foreign, which had a face value of 100, plummeted to below 30. On the morning of August 8th, the market was abuzz with rumors that the company failed to make two due payments totaling $22.5 million. This caused widespread panic in the market. On August 11th, Country Garden's stock price dropped 5.8% in the Hong Kong stock market, with a maximum daily decline of up to 14.4%, hitting a historic low of 0.89 Hong Kong dollars. This marks the lowest point since its record low of 0.98 Hong Kong dollars in October 2008. The company's stock price has plunged 60% this year. As news emerged about Country Garden's potential default on its dollar bonds, international rating giant Moody's downgraded Country Garden to Caa1/Caa2 with a negative outlook. The market dubbed this downgrade as non-investment grade speculative or junk status. After the delays in dollar coupon payments and the release of a loss forecast, on August 11th, Yang Huiyan, the chairwoman of Country Garden's board, and executive director Mo Bin issued an apology, admitting to facing temporary liquidity pressures. They expressed their intention to do everything possible to self-rescue. However, market confidence in Country Garden's self-rescue efforts remains low. Faced with cash flow issues, Country Garden announced on the evening of August 12 that trading in bonds from 11th of its domestic companies will be suspended from the opening of the market on August 14th, with the resumption date to be decided later. The total issuance of these bonds exceeded 16 billion Chinese yuan. Industry insiders analyze that Country Garden's crisis is deepening. One reason is the slow sales growth. 2/3 of Country Garden's projects are located in China's third and fourth tier cities, where the housing market is more sluggish, and the appetite to buy has waned. In July, Country Garden reported equity sales of 12 billion yuan, a year-on-year decrease of 59.9%, marking a record monthly sales low in recent years. On the other hand, a significant slowdown in real estate sales puts more strain on the company's cash flow. A high-turnover property developer needs strong sales and financing channels to survive. Overseas bond financing, once a major channel for real estate developers, is now nearly shut off. This is the crux of the issue. Chinese media data shows that over the past 30 years, Country Garden has developed thousands of projects in China, serving over 10 million homeowners. In 2022, Country Garden led China's housing market in terms of sales volume and operations, a position it held for 6 consecutive years, earning it the title of the universe's largest real estate developer. Yang Huiyan, who is 41 this year, officially took over Country Garden from her father Yang Guoqiang in 2023. However, she had already become China's richest person in 2007 at the age of 25, after inheriting a 70% stake from her father, causing a global sensation. In 2023, her father resigned as chairman of the board due to health reasons, and Yang Huiyan took over in March. Unexpectedly, shortly after her appointment, the debt crisis erupted. The same time last year, Country Garden was still profitable, with a profit scale of 1.91 billion Chinese yuan. In just 1 year, it transitioned from profit to a staggering loss of 50 billion yuan. Although Country Garden's balance sheet shows liabilities of 1.65 trillion yuan, its assets still amount to 1.74 trillion yuan. Therefore, there is no insolvency. However, the exact amount of debt remains unclear. Similarly, the massive Chinese property developer Evergrande initially claimed 1.93 trillion yuan in liabilities, only to later discover it was 2.44 trillion yuan. People within the industry are speculating. How much longer can Country Garden hold on? Will it collapse? Executive Director of Country Garden Service Holdings, Li Changjiang, and non-executive director, as well as the chairman of the board, Yang Huiyan, also seem to sense an impending crisis. The management has recently tried to mitigate risks. On July 19th, Li Changjiang suddenly sold 3,227,900 shares of the company, cashing out approximately 28,247,200 Hong Kong dollars. After the sale, Li Changjiang's stake in Country Garden Services was reduced to just 0.11%. On July 30th, Yang Huiyan, the chairman of Country Garden's board, donated 20% of the equity in Country Garden Services, a total of 6.4 billion Chinese yuan, to the Guoqiang Public Welfare Foundation for charity purposes. The Guoqiang Public Welfare Foundation was established in 2013 by Yang Guoqiang, the founder of the Country Garden Group. This means that if Country Garden declares bankruptcy, the charitable foundation's assets cannot be liquidated. By donating shares, Country Garden aims to preserve some liquidity, but this action transfers risks to homeowners, shareholders, creditors, and local governments. In reality, if Country Garden were to collapse, the consequences would be severe. Firstly, homeowners who haven't yet taken possession of their properties will be devastated, with many likely having invested their life savings into their homes. Homeowners waiting for their properties will also face mounting pressures leading to loan defaults. Furthermore, the market would further depress, triggering a chain reaction that would affect the sales of other real estate companies and greatly impact their financial chains. If such a pessimistic sentiment continues to spread, the entire real estate sector will be in jeopardy. Data shows that last year, Country Garden delivered nearly 700,000 units, with a target of the same number this year. They've already completed 278,000 units in the first half of the year, and it's estimated that over 1 million units will be scheduled for delivery in the next 2 years combined. If Country Garden were to fall, over 1 million homebuyers awaiting their homes would face tremendous hardships. Many might have emptied their life savings or even several generations' worth of savings to buy a house, coupled with significant mortgage debts. This will further exacerbate the financial struggles and poverty levels of these buyers. After the fall of Country Garden, many time bombs in the real estate sector might explode. Industries related to the housing sector, including home furnishings, lighting, appliances, decorations, and more, could experience a wave of bankruptcies. If one by one, the real estate developers face crisis, it would result in tens of thousands of unemployed people in the industry chain, followed by homeowners unable to continue their mortgage payments. Furthermore, pessimistic economic sentiments might spread to other sectors, leading to reduced consumption, decreased corporate revenues, massive layoffs, and early mortgage repayments. This could strain the banking system with the influx of unemployed individuals from the real estate sector into other industries. These industries might also face intensified competition. Ren Zeping, a renowned Chinese economist, posted on Weibo on August 11th, urging support for top private real estate companies like Country Garden and Long for Properties. He pointed out that if the leading real estate company collapses, it would shake market confidence, impede economic recovery, increase financial risk, affect housing expectations, and influence over 60 upstream and downstream industries, impacting employment for tens of millions. According to international experience, real estate is the mother of economic cycles. Out of 10 crises, 9 are related to real estate. Currently, it's not only Country Garden defaulting on its dollar bonds. Many Chinese real estate companies are facing similar pressures. Cheng Xiaonong, a Chinese economist, commented to Radio Free Asia on August 9th that Wall Street's primary concern is the inability to pay the upcoming debt interest, fearing larger figures in the near future. Both Country Garden and Evergrande are private enterprises. The Chinese government neither has the funds nor would it resort to fiscal subsidies to help them repay their debts. The only solution might be bank loans, meaning the banks would shoulder Country Garden's bad debts. Cheng said banks are primarily tasked with handling local government debt. The central government has instructed banks to buy local bonds, helping local governments manage their debt. This route is becoming more precarious for banks, and in such a scenario, it's unlikely for banks to shoulder Country Garden's debt. He also mentioned that Wall Street is not openly discussing that both Country Garden and Evergrande have foreign debts. They neither have RMB nor foreign exchange to settle their debts. Even if they could raise RMB to exchange for foreign currencies, the Chinese central government might not approve. Cheng added, quote, "The Chinese Communist Party's foreign exchange reserves are dwindling. Wall Street's real concern is that a considerable amount of financial investment is in these real estate giants and major Chinese bank bonds, or related stocks. The total global financial investment in China has reached $2 trillion USD. If just 10% to 20% of this foreign debt defaults, Wall Street will be significantly affected." End quote. For years, Chinese developers, burdened with massive debts, expanded to major cities, selling uncompleted apartments. In 2021, the Evergrande Group triggered a series of similar real estate crashes, with millions of buyers witnessing their off-plan apartments turn into unfinished buildings. Whether it's Evergrande or Country Garden, their predicaments serve as a microcosm of the Chinese real estate market. Country Garden seems to be following in Evergrande's footsteps, but its implications could surpass those of Evergrande. As of now, Country Garden has over 3,000 projects, while Evergrande has just over 700. This indicates that Country Garden will have many more undelivered properties than Evergrande in the coming 2 years. Hence, Bloomberg states that with 4 times the number of development projects as Evergrande, the fallout from a potential default by Country Garden would be far more severe than Evergrande's collapse. When real estate companies fall, their bosses remain wealthy. However, the cost of unfinished projects is borne by average citizens, representing a persistent societal issue under the rule of the CCP. The Chinese public's resentment toward the real estate industry has been simmering for years, often leading to street protests. Over the years, Country Garden, like most domestic real estate developers, has faced accusations of false advertising, defrauding buyers, using substandard materials, producing low-quality homes, misappropriating funds, delaying property deliveries, and violating construction regulations, resulting in government penalties. Country Garden teeters on the brink of collapse, alerting economists and market observers. They are concerned that although CCP leaders have pledged to buoy the real estate market, they may not truly intervene to save it. On August 11th, international affairs commentator Wang Jian told Voice of America that the current economic situation is the most pressing issue for the Beidaihe Conference. He highlighted the possible explosion of the real estate sector as a primary concern. Wang Jian commented, quote, "The repercussions of the real estate issue could be the most severe among all current problems. If it explodes, the Chinese economy will be in ruins. China is currently facing an unprecedented economic crisis in recent decades. The CCP, including Chinese President Xi Jinping's political aspirations, relies on the economy for resources. A prolonged economic crisis directly threatens the CCP's objectives, including Xi Jinping himself. Thus, the foremost issue is the economic crisis," end quote. Wang Jian's analysis suggests that under nearly 11 years of Xi Jinping's rule, China has missed vital opportunities for development. The current economic downturn signifies the end of the prosperity initiated post-China's reform and opening up. Wang Jian believes Xi Jinping's series of poor decisions have contributed to the governance crisis faced by the CCP today. He added, quote, "I believe the second major crisis is a governance crisis. From the CCP's perspective, following the 20th Party Congress where Xi Jinping secured a third term, he has full control. The Japanese refer to this as a one-man system, meaning he has no rivals. In such a scenario, the emergence of a governance crisis is not an issue of power per se, but the CCP's diminished capacity to wield it. Despite having all the power, they lack the capability. The reasons are twofold. Firstly, Xi Jinping personally lacks the capacity to handle such vast authority. Secondly, under Xi's decade-long governance, the CCP system has been systematically deconstructed, leaving it incapable of leveraging its authority," end quote.